Forex Focus brought to you by IG. Taking a look today at the huge move we're seeing in Australian dollar on the verge of potential full collapse to recent lows. And a lot of that coming at the same time that Chinese stocks are crashing through new lows. We'll give you all the context on both markets and the correlations and the causes and effects, but really significant moves we're seeing across these two markets in particular, but a handful of other tangential markets. Japanese yen also seeing some big moves rolled up in there as well. But I want to focus on Aussie and Chinese stocks that we'll get to in a second, because that Aussie's down more than 200 pips to start the year, gone from above 68 cents to under 66. And like I say, getting dangerously close within a few hundred pips now of those recent lows around 63 cents. And you go back a little bit further, add some more data, and you'll see that this market is traded, in that range. It's on average traded closer to, 66, 67, 68 than those historic lows that it's heading in the direction of right now. And you might say, well, at the end of the year, I heard so much about US dollar collapse. And now you're talking about Aussie collapse and its potential to come here if it does fall, below 65 and 64. And like you said, in the first 2-3 weeks of this year, it's already fallen about 200 to 250 pips. And so in a couple more weeks, it could be down to those lows. But wasn't it just bouncing back? And it could just as easily bounce back. What has changed? Well, about to show you a pretty wild chart. I can't believe I generated it so many different times just to make sure nothing was wrong. And we're going to pit U.S. stocks in the way of NASDAQ in the blue line there, QQQ, against Chinese stocks, major Chinese stock ETF FXI. That gets a ton of volume and is, for all intents and purposes, synonymous with the Chinese stock market here. And you see a massive divergence. And this isn't a matter of just like throwing two lines up there and being like, oh, see, they've diverged really far. And then you look a little bit deeper and it's like, oh, he's showing me, corn and Apple stock. And it's like, what the heck does that have to do with anything? These are both stock markets. And not only are they stock markets, but FXI, a Chinese stock market, has a lot of technology stocks. And QQQ, the NASDAQ, is overwhelmingly technology as well. So in theory, should be a lot of crossover, a lot of correlation, positive correlation. And they're not traveling in the same direction in the long run. In the day-to-day, their correlation is probably still pretty positive, that, on most days that one is up, the other's up, and down, the other's down. And you can see the kind of peaks and valleys happening in tandem together at various points. But for the NASDAQ to be up over 50% over the course of the last around 12 months, going back to the start of 2023, and the Chinese stock market to be down more than 20% is a crazy divergence. And a lot of this has to do with the Chinese economy has just not bounced back from the pandemic in the same way that the US has, and parts of Europe, the Euro area and UK, have also had similarly strong data to the US, and Canada has as well. And at various points, so has Australia. But a big portion of that Australian economy is dependent on this Chinese economy. And thus you see a correlation like you're seeing here as we tie in that Chinese stock piece to the Australian dollar piece. This is the rolling correlation over the course of the last decade plus between that Chinese stock ETF FXI and Aussie versus USD. And you see it's overwhelmingly positive. It's been positive this whole data set, more than a decade's worth of data. Not only positive, but right now and at various points, positive 0.5. That's pretty strong positive correlation in there. And at some points, even higher than that, as high as, zero point 0.6, zero point 0.7, 0.75. And, this is pretty wild. This is one of those that you might say, oh, this is what I would expect to be diverging or have a no correlation or a negative correlation. It's a forex market and a stock market, usually showing no correlation. If I were to show the correlation between the Euro USD market and the S&P 500, it would probably be closer to zero. But the Australian economy, relatively smaller than the US or the Euro area, and it is largely dependent, its economic data, its potential strength and weakness, a lot of it is dependent on trade with China. And so with China and their economic data and their stock market, a lot of times will go this Aussie, and you see this positive correlation. And so no coincidence that we're seeing historic lows in this Chinese stock market, coinciding with not yet historic lows in Aussie, but kind of on the verge of a collapse to those lows. And we'll show even more data on that front in just a second. But this is also a wild chart. I mean, it is pretty hard to find a U.S., first of all, a U.S. major stock index. I don't think you can find one out of the NASDAQ, S&P, Russell, or Dow that is currently exhibiting in the ballpark of prices that it saw at the financial crisis in 2008 and 2009. And right now, FXI trading near $22, actually today broke $22 a share, hasn't traded below $20 a share, which is quite close to, since that financial crisis in 2008. Pretty crazy. I mean, obviously the NASDAQ, it's had some rough days. The S&P's had some rough days recently, but nowhere close to those type of lows. I mean, NASDAQ is within a couple percentage points of all-time highs, even with the recent slide in stocks. And so this totally different picture from the US, and definitely dragging on this Aussie. As you see here, I've now put the recent price action in the Chinese stock ETF FXI against that Aussie USD Forex pair. And you can see at various points, of course, as you would imagine, Australia is doing its own thing and the US is doing its own thing, and that's pushing that Australian dollar, US dollar Forex pair. But you do see at various points the high correlation, especially the start of that chart. You're seeing the two rally together and peak around the same time and then fall lower in the same time frame and kind of bounce back and forth in a relatively similar time frame, and then slide over the course of the last couple of months. Now, the difference is the US dollar did see some weakness from around November to the end of the year, and the Australian dollar and a bunch of the major currencies rallied against USD. And in that time, Chinese stocks put in even more downside. And now, with the recent US relative strength, they've had strong inflation, strong employment data come out here in the US, not so strong to necessarily be fearful as inflation around 3.4%. But relative outperformance compared to Australia and other places abroad. And now you're seeing the Aussie kind of slide with those Chinese stocks and makes me wonder if the Chinese stock market continues to be move a little bit lower, could you see a big outsized move in this Aussie? And I have up here, the fact that 32.2% of Australia's trade comes from China, given the recent Australian Department of Foreign Affairs and Trade numbers that came out, I think, in the last year or two. Either way, it just goes to show you, almost a third of Australia's trade dependent on China. This could be quite interesting for this Aussie pair here. And just to hammer home this Chinese economic data piece, because you might do a little digging and say, oh, well, their recent GDP numbers have been positive. They've been, 3, 4, 5%. That's good. So what are we talking about here? Well, remember that pre-pandemic, China was, when Chinese stocks were more competitive with US stocks, those GDP readings were well north of 5%, more in the 6 to 7% range consistently. And then you have the big spike lower and higher around the pandemic, the big fall and rebound of the global economy. Saw a similar thing, almost every economy. And since then, they've seen some iffy readings at various times, some, close to 0% GDP readings, and nothing that has consistently been in that 6 to 7% or even higher range that they're used to looking at. And so it's the relative underperformance relative to the China we knew pre-pandemic and relative to some of the data that's coming out in the US. And so here's even more data around that Aussie because, if those pandemic lows come into play like they already have for the Chinese stock market, what are we looking at for Aussie? Well, it has been as low as that spike down to sub 60-cent prices, down to, I think it spent maybe one day at around 55 cents there. This is the weekly chart, so it didn't even spend a whole week down there, but did spend a couple of weeks trading around 60 cents, and right now we're still around 65, 66. And recently, in the last couple of years, with that spike lower that we saw, if I just go back and forth really quickly, you see that spike lower in FXI around a year or two ago after the pandemic, coinciding with that spike lower that you're seeing here in 2022, about a year or two ago, same time frame. And at that point, Aussie got down to around 62, 63 cents. So could move lower by a couple hundred pips if you do see a correlation there, and Chinese stocks do move even lower or stay near these lows, and Aussie follows it. But of course, if there is a rebound in this Chinese stock market to the upside, the Aussie collapse can be thwarted and turn into one heck of a rally, because I will bring up these Chinese stocks one more time to show that at various points, especially you look at before and after the financial crisis, some real rippers in there for the Chinese stock market. This is one that can rebound very quickly. And at various points, everybody knows, whether you've been trading or not, you've heard various times in your life the story of how the Chinese economy is going to overtake the US and be the biggest economy, and Chinese stocks are going to be bigger than US stocks. And at certain points, you can see the price action. It's looked like that. You've seen this ETF go from trading in the 20s and 30s to trading in the 50s, 60s, and up to 70 over the course of just a year or two. So Aussie can rebound just as quickly as it can collapse. But with these Chinese stocks on their lows, it's looking pretty interesting, the potential for that Aussie collapse. We'll see what happens.